Short introduction of December 2018, as at the moment everything is bad. Cryptocurrency investing and mining look absolutely insane. However, ICOs are held, pumps happened, new coins appear, even new mining equipment with a pretty good daily return is presented. There is still life. That is why this topic has a right to exist and remains relevant. After 2017, the second most popular question in the crypto world is: what's more profitable, mining or cryptocurrency investing? The first one being, of course, how much will Bitcoin be worth in the future? Which I answered in my first video, Prospects for Cryptocurrency Market. Now I will answer the second one. I will start with a little bit of a backstory to this. In November 2017, I presented a report on mining at Blockchain UT conference. I demonstrated a $5,000 mining rig and explained how it worked and how much money you could make. This was only 3 weeks before Bitcoin shot up over 19,000 from 8,000. The most popular question asked after my speech was, and what's more profitable, mining or cryptocurrency buying? At that moment the answer seemed obvious, certainly buy and hold. Let's calculate. The cost of the mining rig at the day of purchase of the components, June 2017, was slightly over $4,600, and the Bitcoin rate at that time fluctuated in the range of $2,000 to $3,000, or on average $2,500. In other words, I could buy 1.8 Bitcoin. And at the time I was making my speech, this would be about $15,000 at the rate of $8,500 per one Bitcoin. In addition, approximately 0.6 Bitcoin was mined for that period. And even taking into account the residual value of the equipment, this would still be lower than the theoretical purchase of Bitcoin. And then one man came up to me and said that he had been mining since 2013. And since then, all in all, he has mined over 200 Bitcoins, with the vast majority of coins, of course, mined in 2013 and 2014. Also, according to him, he has spent not more than $15,000 on the equipment for the entire period since 2013. I didn't ask him about what type of equipment he had and in which periods. Interesting. Whatever the possible calculation variations, I couldn't get more than 200 Bitcoins even if I would buy it by month in equal amount starting from $15,000 over the last 5 years. In this case, the average purchase price would be only $75, which does not seem possible. I'd rather believe if the average price would be $750. So it's only 20 Bitcoins. What? So much for the backstory. This was according to the person I don't personally know. Let's do some calculations based on the actual figures. Let's compare Bitcoin mining and buying Bitcoin. Take a date in the past and $10,000 and buy mining equipment and Bitcoin. I like the 1st of July 2016, when Antminer S9 ASICs were first imported to Russia. These ASICs make the calculations easier, because we know their price at that moment and technical mining characteristics. More importantly, one should compare these two activities not at any point in time, but specifically on the cusp of the change of equipment generations. That's really important, and at the end of the video I'll explain why. So, the 1st of July 2016. Best case scenario, if you have $10,000 plus delivery costs, custom expenses, if any, I have no idea, and taking into account the markups of the middleman, the price of one ASIC runs into $2,300 plus its power supply. Let's take $2,500 per set to make it an even figure. I found this information in the Russian forums, where prices and ways of buying these devices were actively and thoroughly discussed. So, all in all, we've got 4 devices. At the same time, we buy 14.8 Bitcoin at a price around $675 at the Bitfinex rate as at the same date, July 1st, 2016. I'd like to review 2 time periods. Prior to the nostalgic Bitcoin pump to 19,000 in December 2017 and to the present day, the end of December 2018. I know several dozens of people who bought or mined Bitcoins or some other cryptocurrencies prior to the December 2017, but none of them exited at 19,000 or 15,000, nor even at 10,000. Almost all of them are still holding Bitcoin. Amazing? Hell no! Everyone is taken over by greed. On the day when Bitcoin was worth 19,000, nobody thought it was going to go down. Everyone was sure that the price would only rise. But when it nevertheless fell to 15,000, nobody wanted to get out, because 15,000 was definitely not enough. 19,000 would be better exit. The same thing was going on when Bitcoin was losing another 1000 in value. In short, it's a classic. That's the way the market works, and not everyone is ready for this. The point is that it's absolutely wrong to use only the maximum price point even for theoretical calculations. Experience shows that only random lucky people manage to exit at the highest high, but certainly not many traders and investors do. Therefore, our calculations cover 2 time points. By opening a Google Doc, spending hours copy-pasting numbers, we end up with data on the return, portfolio value and structure for both a miner and a crypto investor. Let's look through the tables and see what we've got here. Month and year, that's clear. Number of days per month, to get an accurate calculation of mined coins and power costs. Network difficulty, taken from the chart of blockchain.com. Return on ASICs, using the formula below, we calculate returns per 1 and per 4 devices. Here is the formula, where P, return in coins, T, period of mining in seconds, R, block reward in coins, H, hash rate per second, and D, difficulty. It is important to take into account that 1 month after the selected date we picked, the block reward was cut by half and amounted only 12.5 Bitcoin per 1 block. Return in US dollars, the same for 4 devices, to calculate total return given the monthly conversions of what has been mined into cash. Power consumption, amount consumed and total costs in dollars. I used original tariff in my calculations, 5 cents per kilowatt. Equipment's residual value is probably the most controversial part of the entire calculation. The exchange rate was going up a long time and equipment prices remained the same, even for second-hand devices. And in the late 2017 and early 2018, equipment prices were simply jaw-dropping. Certain data from this table will be used in the next one. We need this table to make various charts. So, let's look at it. Date and month. That's clear. Miners' Bitcoin accumulation is taken from the first table. Amount of Bitcoin in the investor's portfolio. Power consumption. Power expenses, figures from the previous table. The portfolio values that of miner in investor. Amount of Bitcoin multiplied by its exchange rate taken from the monthly chart of Bitcoin on Bitfinex. For the miner, the residual value of the equipment is added and power expenses are deducted. Miner's revenue is broken down by month in dollars. This figure represents what it would be like if the miner exchanged the mined cryptocurrency into dollars, paid for the energy consumption, and accounted for the residual value of the equipment as at each month. Now let's make some charts. Let's start with the accumulation of Bitcoin by the miner and compare it with the investor's portfolio evolution over the entire course of our theoretical experiment. As at late May 2017, the amount of Bitcoin held by the miner and investor became equal. It's 7 months to go till December. Then the miner smoothly increases his Bitcoin holdings, mercilessly wasting electricity and heating the earth while doing so. As at the end of December, the miner had 17.4 Bitcoin versus investors 14.8 Bitcoin. During the next 2018, the miner mined only 0.6 Bitcoin, having accumulated 18.1 Bitcoin at the end of this experiment and surpassing the investor by 3.3 coins. Well, investor's Bitcoin portfolio has certainly not changed. The interesting part here is that over half of all Bitcoin mined is attributable to the first 6 months of the total 29 months, meaning 1/5 of the entire mining period provided 50% of all output. Frankly speaking, not much. If the start was a month earlier, when block reward was twice as high, the miner would have an 1.5-fold advantage over the investor in the end. If the start was a month later, the miner would never catch up with the investor. This is why it's important to have an advantage by buying new generation equipment at the very start before all other participants get their hands on it. Here is how the value of both portfolios looks like in dollars. I see no point in estimating portfolio values at the peak of Bitcoin price. It's just a short-term event. At the closing price in December 2017, the miner would get more than $250,000 including power consumption costs and an absolutely fantastic price for his second-hand equipment. Investor's performance is less impressive, almost about $205,000. As of today, December 2018, the miner's portfolio is worth $72,000, while the investor's almost $64,000. Well done, guys! Well done. Let's single out the difference in the value of portfolios for illustration purposes, in US dollars and in Bitcoins. Jumping ahead of myself and slightly bringing up the topic of the next video, I suggest taking a closer look at the case when the miner locks in profits on a monthly basis by converting what has been mined into cash. And we get this. If we change scale properties, we'll see the following picture. The accumulated profit, including power costs, amounted to slightly over $23,000 in December 2017 and $26,400 in December 2018. In addition, a loss was incurred due to the drop in the exchange rate, which wasn't revealed even by the network power loss. On the one hand, not much. On the other, the miner owns equipment, the price of which fluctuated during this period somewhat like this. Even slanting line represents a period of a little over 1 year until July 2017. I didn't find many references to the prices for second-hand equipment during this period. What I found was still at the same level of $2,000 per one set. Moreover, we see that the return of the miner allowed recovering the expenses on the equipment in less than half a year, the result one can only dream about today. All in all, for that period, I estimated the price as $8,000 with a monthly depreciation by 100. After that, however, starting from August 2017, the price started rising, as evidenced by the daily price change log for Antminer S9 published in relevant Telegram channels. Fortunately, groups in Telegram save chat histories. And as we see in December 2017, January 2018, the price became stratospheric together with the rate of return and the Bitcoin price. However, it dropped even more dramatically and sooner than the Bitcoin price itself. Let's summarize both periods in percentage points. Here are charts to illustrate all that. The miner has a strong lead if he accumulates what has been mined and surely loses out if he converts mined bitcoins into cash on a monthly basis, even if we take into account the residual value of the equipment. 330% in December 2017, again in view of the exorbitant price of the second-hand equipment, and relatively moderate 165% at the moment. Not much? Absolutely true. If we compare these figures with the performance of IPO investments through United Traders Marketplace for the period of June 2016 December 2017, we see that the mining strategy involving conversion into cash looks fine only in December 2017, but at what cost? And as of today, the situation is completely different. Classical investments have surpassed the mining with Bitcoin accumulation strategy and crypto investments. If the Bitcoin price does not double within the next year, conventional investments will be very much ahead. We will discuss the return on investments into IPO some other time, especially since this is not a theoretical example, but a totally actual performance. Let's sum it all up and make a firm conclusion. Buying new generation mining equipment before the multiple growth of cryptocurrency network difficulty allows obtaining more cryptocurrency in the long term than the plain purchase of crypto. I'd like to draw your attention on the following fact. Purchase of new generation equipment prior to the growth of difficulty and exchange rate. This is a very particular but absolutely real case. Now we have to be the first to find and buy such equipment or invent it and keep a cold blood while accumulating cryptocurrency with the expectations of its growth price increase in future. And that's not what we see today. Is such scenario possible these days? Well, definitely yes. Today, numerous options of equipment to mine anything you want are available at excellent prices for those who only examine mining, including many algorithms that were previously available only to GPU miners: Groistel, Equihash, Lyra2, Kryptonite, Skein, Mirrored Groistel, Libra, and even Nethash. All this has become available owing to the low prices for Bitcoin and altcoins. Those who got into mining in 2018 before the new generation of ASICs for both Bitcoin mining and other algorithms appeared lost. And it's very likely that they will not be able to get or recover their equipment costs anytime soon, if at all. Just as Bitcoin investors in 2018 who are also in a deep drawdown and waiting for the price to exceed the historic high. As far as the classical approach to mining, regular conversion into cash, is concerned, it loses out when the price for cryptocurrency rises and can beat other strategies only when prices decrease evenly. And that's what happened during the entire period starting from early 2018. Also, it goes without saying that mining has a limited return, both annual and within several years. Because sooner or later the equipment gets obsolete and needs to be replaced by new devices, the purchase of which requires spending most of the funds earned when mining on the old equipment. If I was offered to choose only one option, then the selecting of conventional investments would be more reasonable, despite the difference to the benefit of the miner accumulated bitcoins. Why? I'll tell you in one of my next videos. Who is a miner and how is he different from crypto and classical investors? Why do so many people prefer mining to purchasing cryptocurrencies or stocks? I'll dive deep into this question in one of my next videos. Bye! Like my video and subscribe to my channel. Thank you. Фух! Запорола мне дубай. Не-не-не-не-не. Окей, never mind.